Welcome to the instructional video for Chapter 5. Chapter 5 discusses the purpose, organization, and components of the statement of cash flows. After completing Chapter 5, you should be able to explain how the statement of cash flows is organized, identify operating, investing, and financing activities, define direct and indirect methods for computing operating cash flows, compute and interpret cash flows ratios, and prepare and interpret trend statements of cash flows. The purpose of the statement of cash flows is to help us understand where cash comes from and how it is used. It reports the cash receipts, cash payments, and net change in cash from one period to the next. Cash management is extremely important for the well-being of a company. Wealthy companies have closed business because of poor cash management and because did not have cash on hand to meet their immediate obligations. The statement of cash flows answers these questions and more. What made cash increase? What made cash decrease? What did we spend money on? How did we generate cash? Did we get cash by borrowing money, by selling assets, or through our operations? Did we spend cash on plan assets, paying down our debt, or paying dividends? This statement is useful because it helps investors and creditors assess the ability of the company to generate future cash flows, the ability to pay dividends and debt obligations, the degree of reliability of net income, and what the investing and financing activities during the period are. The statement of cash flows is organized into three categories of cash flow activities: operating, investing, and financing activities. The net change in cash is shown for each category and then added or subtracted to get one number of the net change in cash. The operating activity section can be prepared by either using the direct method or the indirect method. The operating activity section reveals the cash generated from company's day-to-day operations. The company must determine revenues and expenses on cash basis. Therefore, it has to eliminate the effects of income statement transactions not affecting cash and convert net income to net cash flow from operating activities by using either the direct or the indirect method. The direct method shows in a very comprehensive format the flows from operations. We see receipts from customers and payments to suppliers, payments to employees, payments for taxes, interest, etc. This method is very user-friendly. However, the accounting systems are designed to fit the accrual basis of accounting and the information is not readily available. Companies have to perform a lot of analytical processes and calculations to arrive at the numbers used under the direct method. This exposes the statement to mistakes, and for that reason, GAAP requires the companies using the direct method to reconcile their calculations by preparing the section using the indirect method. This doubles the work, and as a result, more than 95% of the companies choose to use the indirect method. The indirect method utilizes the information readily available in the accounting systems without many conversions. The operating section always begins with net income or net loss determining the income statement and is then adjusted from accrual basis of accounting to cash basis. It is not particularly user-friendly. The adjustments make sense to a person that has a significant accounting knowledge on the mechanics of this statement. One advantage of the method is that it emphasizes the difference between the reported net income and the accrual cash flow from operating activities. For this course, you need to understand the basic logic and perform an analysis on the statement of cash flows. You will not be asked to prepare the statement. This skill will be mastered in the Intermediate Accounting 2 course. When analyzing this section of the statement, your attention should be focused on the very beginning of the section, if the company was profitable or not, and the very end of the section, if the company was able to generate cash inflow from their operating activities, that will be considered a favorable outcome, or resulted in a cash outflow from their operating activities, that will be unfavorable outcome. Be careful not to dismiss the company immediately if you see net cash outflow from operating activities. All startup companies have trouble generating cash from customers when they first start, or it could be just a temporary setback. A further investigation on the nature of their service or product, competition, ability to raise funds, and be profitable will be necessary.